Hi, welcome to Curious Bricks. Today we're going to talk about United Parcel Service, ticker symbol UPS, Q3 2020 earnings report. UPS is part of S&P 500 index under the industrials sector. The company's earnings call was hosted on October 28, 2020. Since this is our first time covering UPS, we will start with a quick overview of what UPS does and how they make money. UPS is one of the largest logistics companies globally. It was founded in 1907, and its fiscal year 2019 revenue was around $74 billion. The company's key market is in the United States, which represents 80% of total revenue, while international markets accounts for the rest. The company's business is divided into two segments, global small package and supply chain freight. Global small package segment is further divided into U.S. domestic package and international package. U.S. domestic package covers a total of $46 billion revenue, which offers air and ground package transportation service. International package represents $14 billion revenue, which offers similar service in the U.S. Europe is the largest regional market, which accounts for half of this segment. Supply chain and freight segment offers a variety of service to business customers. The services range from freight forwarding, truckload brokerage, less than truckload services, and other businesses. UPS owns one of the largest air fleet in the U.S. UPS competes with national postal services along with global and regional logistics companies. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 31st, 2020, UPS share price was $168.40, and its market cap stands at $145 billion. The trailing price-earning ratio is around 32. Forward dividend is $4.04 per share, or 2.4% yield. As of December 15th, the short interest of total floating shares was only 1%. Now let's take a look at their latest quarterly financials. We will start with income statement. In Q3 2020, UPS reported total revenue of $21.2 billion, which is 16% higher than the same quarter last year. Revenue growth is strong across all three segments. International and supply chain and freight segments delivered record profit. However, the operating expenses increase outpaced the revenue growth in this quarter. We will review the specific reasons in the upcoming slides. In summary, UPS reported a total operating income of $2.4 billion, or 11% higher than a year ago. UPS also published the revenue by sub-segment. During Q3, UPS Ground growth was extremely strong, driven by weekend and SMB markets, but Next Day Air and UPS Freight were lagging behind other sub-segments. Now moving to the balance sheet. UPS increased its cash on hand and marketable security by $3.5 billion to a total of $9.2 billion, while long-term debt and financing leases only increased by $1.5 billion to $23.3 billion. Overall, UPS liquidity looks quite healthy. In this quarter, the management made a comment that the structural market shift to e-commerce remains strong. Weekend ground volume increased substantially. SMB market growth accelerated. B2C shipments increased by 33%, but B2B volume was down 7.8% year-on-year. The management also announced that it started its Transformation 2.0 initiative in September, which aims to streamline its workforce. Transformation 3.0 will be launched in 2021. This initiative aims to optimize operating expenses. Lastly, the management provided more context as to why the operating expenses grew faster in this quarter. First, there were additional costs associated with expanding weekend operations. Secondly, the benefit expenses increased from hiring additional employees. Lastly, lower than expected productivity gain and lower delivery density also contributed to higher operating expenses. During the Q&A session, one analyst asked when the cost savings from the current transformation initiatives will be reflected in P&L. The management commented that the bottom line impact will not be reflected in Q4 due to seasonality and added employee benefit cost. They expect to see the P&L improvement in 2021. Transformation 2.0 starts with Voluntary Separation Allowance Program, or known as VSAP, which was offered to 11,000 employees. So far, about 1,600 applied. This program would generate hundreds of millions of dollars in savings. The company will tackle general overhead after VSAP. Several analysts question the management's decision of reducing future capex while the competitors plan to increase capex. The management emphasized that the new strategy of better, not bigger theme. 2021 capex will target $4 billion, which is significantly less than the $5.6 billion in 2020. The reduction will mainly come from buildings and airline. In addition, spend on technology is now going through licensing model, which will show up as a different line item than capex. Lastly, international business tends to be asset light. One analyst also asked about how sustainable is the international business growth. UPS posted double-digit growth on both revenue and profit in Q3, driven by strong Asian and European markets. The company also implemented a surcharge program in Q3, which added $120 million to the bottom line. However, the management did not provide a clear answer regarding the market demand. Now let's take a look at UPS stock performance before and after the earnings call. UPS reported revenue of $21.2 billion, beat analysts' expectation of $20.2 billion, and its adjusted EPS of $2.28 also beat the consensus of $1.90, but the market had a negative reaction after the earnings announcement. Lastly, here's the latest summary of analyst ratings of the company. As of December, there were 27 analysts covering UPS. The ratings look quite diverged. While the majority of the ratings were on hold and buy, a few analysts also gave strong buy and underperform. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.